Okay, I think we are ready to start. You've already started live streaming. Hello, Cannelle. Hello, everyone. Hello, Tessa and Mr. Eric. Happy to have everyone here. My name is Monalisa, the host for today, and we have with us Cannelle Maricaux. Please help me with your
Maricaux.
pronunciation. Okay,
Maricaux.
thank you so much. Happy to have you here. So welcome to the Digital African Chamber of Commerce Roundtable. What we usually do here would be to bring important conversations to limelight as it has to do with the African continent. Of course, we've had the privilege of speaking with very influential and people in the African continents who are shapers in their different industries, and it's really a pleasure to have you here. So I'd like to introduce our usual sequence. The first, we would start with, of course, the introduction, which we just did, and then we are going to run into your own introduction, your portfolio, and then we would run into the actual discussion where we get to talk about the different views and discuss topical areas of our topic today. And then we would open the mic for the audience to participate with their own questions while we supply them answers to the best of our abilities. Does this go well with you?
Sure. Let's go.
Thank you. Absolutely. Thank you. So let me dive into the discussion for today, starting with the introduction of the topic, which is navigating the investment ecosystem in the GCC. Of course, that's the Gulf region and the African region, considering opportunities and investment risk mitigation. So just before we delve into that, I'd like to take the overview of the roundtable. So here we actually use the roundtable, convene the roundtable to create a transformative experience where industry leaders, policymakers, visionary thinkers, converge to shape the future of commerce and innovation in Africa. So this significant event is a unique platform that brings together stakeholders from various sectors to drive collaboration, explore new opportunities, and influence policies that will define the continent's digital landscape. We welcome you to be a part of this conversation, our effort to actually make our own contribution to societal building, fostering innovation, and propelling Africa forward towards a brighter future. Welcome once again to the African Chamber of Digital Commerce virtual roundtable powered by decentralized media. I'd quickly go straight to unveiling the capacity of our speaker today. Of course, we bring you no small speakers, we bring you expertise, we bring you experience, exposure, knowledge, information, all put together in one. And we have Cannelle today who will be discussing extensively the topic in question. So I'll take a very brief, just a little tip of the iceberg of who Cannelle is. A seasoned investment advisor with over 6 years of experience dedicated to facilitating access to emerging technology and sustainability investment on a global scale. In her role as an advisor at AIX Investment Group, Cannelle has successfully connected the capital of over 100 individuals and families to high-yielding sustainable solutions across global markets and asset classes. Her approach is rooted in a deep understanding of clients' needs, ensuring tailored financial advice that aligns with their goals while upholding environmental, social, and governance principles. Beyond her role at AIX, Cannelle is also the founder and CEO of Koolute Investment, a mission-driven platform focused on unlocking opportunities in the burgeoning real estate markets of the Francophone Africa. Through Koolute, she is committed to discovering prospects and, of course, on the intersection of technology and real estate, aiming to amplify grassroots level impact in communities and fostering growth in the world of course, in the region yet untapped, which is Africa, with a specialized focus on wealth management, emerging technology, real estate, sustainable investment, alternative investment, client relationship management, and risk management. Cannelle is recognized for her expertise in navigating the complexities of the technology ecosystem and, of course, the African market, and providing successful investment strategies across convergent technology. She is also a graduate, a bachelor degree holder in international business from Vesalius College and a BBA from the International University of Monaco. Hello, Cannelle. This
Hi.
is you we're talking about.
Absolutely. So just to correct a little bit, it's Koolute,
Okay.
because it's supposed to be French. There's just no accent. So Koolute in Wolof is the local language in Senegal, means trust. So that's a little bit of the background story there for you, right?
Yes. So what influenced the choice of trust? Like, we'd like to just hear a brief of that.
Very simply put, because there's no trust in the continent, right? What drives investment is trust, right? If you're not informed, you don't invest in something you don't know, right? And that's this perceived perception of risk is what led me to choose the word Koolute as trust, because that is the main area that we're all working on as, startup founders in the region, right? Or anyone who's trying to invest in the continent. They're trying to either trust it or implement trust in whatever capacity, right? That's why the word Koolute.
Beautiful and very amazing. You really hit on it. I think we'll delve into the details of how much of trust we are lacking as a continent and what really is the cause and possible ways, of course, with the effort you're putting in and the effort of sincere and mission-driven organization like ourselves at the Chamber, what we can collectively continue to do in the right direction to fix as much as possible. Now, I'd like to take on the very first question. Let's even get to hear what's your motivation for choosing your line. I mean, mission-driven, impact-driven. Others would rather make money. I mean, investors from across the world are coming into Africa with the money bags and they really know what they want. They're not here for so much of trust building or here to make any extraordinary impact. They're here for the money. What influenced your own decision?
My own decision, respective of building a business in Africa?
Yes, building a business in Africa and building your kind of business that is leveraged and pioneered on trust. Not every business person really cares about trust, to be very honest.
I would highly disagree. I would highly disagree, because if you don't understand something, you don't invest in it. And that's not just applicable to Africa, that's applicable to any investments you might make, right? If there's no transparency, then you will not understand it. If you don't understand it, why would you even put your funds there? Would you even have any exposure there? So I would just disagree slightly with that. I would say that maybe trust is a bold word, but there is a lack of understanding, right? Not just understanding, but also access to the investment opportunities on the continent. That is the problem. We have it all. We have the natural resources, right? We have some of the most lucrative investment opportunities accessible. But how do we access it? That is the main issue, right?
Okay,
and
okay, so I'd like to have an overview of the general landscape, right? What's the perception of the African investment ecosystem and the GCC? Just a generic overview of how do you think the global landscape is looking at Africa investment in Africa and the GCC?
Well, for the GCC, I will just correct you there, because I just have experience in the UAE specifically. So I don't want to generalize about the GCC as a whole. And when it comes to Africa, I solely have experience in Francophone Africa.
Yes,
right?
you highlighted
just
that.
No one generalize what I'm about to say about, the general perception when it comes to and sentiment that investors have right now about investing in the UAE or investing in Francophone Africa, right? Now, starting with the UAE, what the UAE has done so far, COVID has been a test, and the Middle East has shown extreme resilience, right? The UAE has arisen as one of the most stable currencies as well, right? And when you go through periods of high, market volatility, it tests the sustainability, how sustainable the investment strategy of that particular government, country is, right? And the UAE has demonstrated time and time again. That's why we see a surge in interest for investment within the UAE, right? And that's
would you say the same for Francophone? What's the sentiment there? I mean, post-COVID experience, risk management and all of that. What's the sentiment in Francophone Africa?
Well, it's very hard to appraise. I would say that the whole continent, and anyone who's been fundraising this year can tell you that we're going through, it's like a freezing spring, right? What happens when there's uncertainty, people panic, right? And they pull back. Right. And that's what we've been experiencing, especially when you look at an emerging economy as young as Africa and as uncertain as Africa. Right. And so that's the overall sentiment as a whole. Right.
Okay. So definitely, I mean, we could perceive as much as is happening in the Anglophone region, just in comparison. What would you say about, yes, we've talked about general sentiment as to how, you also mentioned something around freezing investment. One would expect that there would be a continual, I think before COVID, there was quite some influx, some really, really exciting influx, but all of that seemed to have been withered away by the wave of COVID. And what would you say because I mean, other societies have moved on, not completely, but they've actually been able to cross some lines. What do you think is the reason behind the freeze, the actual squeeze we still have in Africa currently?
Is the perceived perception of risk. It's always the same thing. That's been the biggest bottleneck of Africa, right? And now we've seen all the perceived perception of political instability. We see the Russian, coming around in the Sahel, the French being kicked out. Automatically, people panic, and they remove themselves. Again, I do not want to generalize because this is not. You have to take it. It's a case. It's not a one size fits all. Right? What's been happening in Niger is not what's been happening in Kenya, for instance, right? So we need to be country specific and we need to be industry specific as well. When we talk about, what is the sentiment towards investments in Africa? Some industries have still been doing well, right? Considering the current market.
Yes, right? So we're going to talk about the industries specifics as to our observation. Of course, these are all observations, to be very honest. Our conversations here are born from individual experiences, market understanding, and not necessarily 100% one cap fits it all kind of arrangements. I just wanted to put that out there. So you spoke about instability. My opinion this time, not the opinion of the chamber, I feel that has actually caused quite some lag in recent times, and I was expecting that would come in somehow in the course of this conversation. What do you think is the major role that the current trend of insecurity and political instability has played in actually slowing down the influx of investment?
I would say it's been tremendous for those that were just starting to take interest or trying to get more exposure into the African market, right? But so that's what I would say. Those that are there physically on the ground, that have the local expertise, it has presented, if anything, more investment opportunities. What we see in Mali, for example, right? There's a surge in investment opportunities in mining of gold. Right? So it depends on which type of investors you're talking about, you're referring to. For private investors, there's a surge in opportunities, right? Whereas if you're looking at institutional investors or governments, it's more of a hands-off approach. until everything stabilizes. Yeah.
Okay, so I'd like to ask again, what are the trends? I think we've hit on this partially. What are the trends and opportunities you actually see in the GCC and the African region? I'm talking about similarities, of course, in Francophone and the GCC. They are not all the same, but I believe there are some underlying similarities that can be found in both economies. What's your opinion on this?
Well, first, let's start with Africa, right? Let's start with the opportunities now arising in Africa, which have more or less been the same, right? So it's a fast growing and urbanizing population, right? The current African population, we're projecting to reach 1.7 billion by 2030. And over 80% of population growth will occur in cities, making Africa the fastest urbanizing region, right? So rising incomes will contribute to an increase in consumer and business spending, is expecting to reach it's about $6.6 trillion by 2030. So there's definitely an opportunity there for service industry, right? Then there is a second opportunity is the industrialization in Africa as a whole, right? It is underway with a potential to double production to nearly $1 trillion in a decade, right? And growth is driven by manufacturing to meet local demand and substitute imports as well. So there's an opportunity there for Africa to become a significant manufacturing center, attracting industries shifting from China as well. The third opportunity, I would say, is closing the infrastructure gap, right? There's a very poor infrastructure, but it's a major barrier to investment and growth in Africa, as we all know. Right now, the annual infrastructure investment doubled to around, if I'm not mistaken, $80 billion, right? Creating opportunities for investors and entrepreneurs. And that's definitely my sector, right? And significant progress in addressing electricity access and other infrastructure challenges is also at play. Now, a fourth opportunity is innovation in agriculture and resource wealth. Because Africa is rich in agriculture and mineral resources, but the challenge is in translating them into sustained economic development. That's the challenge, right? So here, innovation and investment can unlock shared wealth, especially in oil and gas exploration, right? And the domestic gas market in Africa is expected to grow by 9% annually and potentially utilizing 70% of the continent's gas by 2025, right? And I would say a last point that I would mention is the increasing digital and mobile access, right? Sub-Saharan Africa experienced the world's fastest rate of new broadband connection since 2008, from 2008 especially to 2015. And mobile data traffic across Africa is projected to increase 7-fold by 2030. Those are the predictions. So over 120 million active mobile money accounts in Africa have been created, contributing to a leapfrogging from traditional banking, right? So digital and mobile access trends could add about $300 billion to the African GDP by 2025, enhancing productivity and market access. And we've seen that, especially in Francophone Africa. We had our first unicorn, which is Wave, which is a mobile financing app. And that now, basically most of the population, especially if you take whether it's a taxi or construction worker, cannot live without, right? So that's what I would see for Africa right now in terms of opportunities and trends. And for the UAE respectively, I'm not going to speak for the GCC, there's the same opportunity in travel and tourism, right? The tourism industry is the largest and most expanding business in Dubai, and it contributes to about 28.5 billion to the economy of the UAE over the past decade. Right. There is also opportunities in real estate business because it's one of the major industry contributing to the total GDP of Dubai. Right. Also in marketing and advertisement, the UAE has taken the lead in the marketing and advertisement industry, where the total spending for the first quarter of 2023 was about $410 million. Right. That's 46% in spending for ad expenses. Right. Then there's also health and hospitality, because it has been greatly emphasized since the pandemic in 2020, with greater significance to that was given to the healthcare industry. Even the aesthetic market holds a critical due to the highest ratio of plastic surgeons per capita in Dubai. So that represents, again, another major investment opportunities. Another interesting point about Dubai, Dubai in general, that we've seen arising over the last few years is the increase in initial public offerings, right? Notably, with the latest one, the most successful one was DEWA, the electricity company.
Yeah.
Familiar with the DEWA public offering?
Yes, so I came across the news, not so much in details, but yes, I was aware when they actually did their IPO.
Yes. And a lot of government, there's quite a, basically it's a buoyant IPO market, right? We see, for example, Tadawul that launched their IPO and they became the 17th largest exchange globally here in the UAE. Also, ADX Resurgence, it's the Abu Dhabi Securities Exchange, experienced increased listings, right? So DEWA IPO, if I'm not mistaken, was at $6.1 billion, right? So that's pretty significant.
Yeah. Okay, thank you. I think you've given us quite an extensive overview of these two markets. What I kind of picked out there is, of course, they have their own sentiments. You have the UAE market tilting towards tourism. Tourism is not so much at its best in Africa, but I see commonalities in areas like real estate. Real estate would have actually benefited for some growth in the African markets in recent times. Now, let's pick, of course, tech. Tech seem to have also, you mentioned mobile and digital economy, seem to also have benefited quite some measure in the past post-COVID, yeah. Because I happen to be someone who plays in the tech ecosystem, startup ecosystem, and a lot has happened. Although there seemed to have been a nosedive in most recent times, that's generally a global problem and a cash squeeze VC ecosystem, which was powering the African market startup ecosystem. Now let's talk about the previous point you mentioned around stability, government policies, and basically stability. For economies like this, we're talking about mid-level investors, not necessarily the high end. What kind of strategies do you think? Okay, let's talk about the micro and mid-level investors. What kind of strategies should they be looking at to help themselves in a bit of a volatile economy that we have in Africa, with a lot of drama coming up politically now and again? What do you think? What's the right route?
So it would be difficult to summarize all of that in the next 30 minutes, but I'll try to be as concise as possible. Well, first of all, we have to establish a strong due diligence process for market entry, right? That's crucial to long-term success in African markets, right? Invest a lot in the due diligence process, because what we see in Africa is that data is scarce, right? There's a major shortage of accurate and timely data, right? And which is paramount and indispensable for effective decision-making and market projection, right? So due diligence for market entry is paramount. So invest in selecting the appropriate entry modes and consider entering the market through either acquisitions, partnerships, or joint ventures, right? The second important point is local collaboration. So source local partner to create efficient supply chain and distribution channels. So investors should look for sourcing partners who understand the preference and issues of local markets and have strong community links. So a good sales and distribution network can be created by leveraging a mixture of third-party, wholesale, and direct distribution models, right? A third point I would make is also deal with jurisdictions that have bilateral investment treaties in place. And let me explain why. I would advise for investors to consider carefully what investment projections are available to them in the jurisdiction in which they're investing. So including recourse to international arbitration, as well as how to structure their investment in order to best protect themselves. Because when foreign investors face challenges, they can often find helpful rights and solutions in the laws of the country they're investing in. But most of the time, they might find even more useful support in bilateral investment treaties, so BITs, right? So these are strong tools that can help handle and lessen the risks faced by investors, right? And offer some sort of protection. Now, the fourth point I would make is ensure an ongoing risk management strategy. And that doesn't just apply when, to Africa, when you invest in, one of the youngest market and most dynamic market, where the regulatory framework is still very fragile. This applies to any investment you make, whether it's in the GCC, in the UAE, in Europe. Make sure you have an ongoing risk management strategy that is being applied, right? So in Africa, what do we look at with risk management strategy? There are major challenges in currency risk management. Here we're dealing with 41 currencies that are of the most, in Africa, we have 41 currency and they're the most illiquid and volatile in the world, right? So foreign exchange volatility and foreign currency shortages remain some of the biggest challenges facing private equity investors, mostly private investors in general, right? In Africa, especially when you think about exiting. If you invest in a startup, when you think about exiting, that's the main thing you have to look at, right? And the second concern is the cost of hedging instruments, which is still very, very high, which brings me to my other point, which links directly with having an ongoing risk management strategy, which is diversification, right? Now, diversification, again, just like we mentioned, is not a one-size-fits-all. It will depend on whether or not you're a private investor, right? An institution, a government, and so on and so forth. But an important point here, when you're looking at Africa nowadays, is that recent years have shown that how susceptible African countries are to economic shocks and fluctuations in currencies and commodity prices. So some are more vulnerable than others because their economies are dependent on the export of one or just few commodities or primary products. And when there's a downturn in commodity prices, monoproduct economies like Nigeria, Angola, Zambia accordingly suffer, right, from economic stagnation. So that would be my fourth point. My fifth point would be to leverage tech, right? Leverage tech or invest in companies or industries that are heavily leveraging tech, as they can heavily, mitigate the risks, your investment risk, especially in the finance industry. I'm looking specifically here at the fintech sector. If you speak number, the African fintechs, have attracted about $6.5 billion in cumulative venture capital deals in 2022. I'm talking about the lack of Juma and Tala as well. Because what we see is that new technologies and leads to more transparent data, which are helping African businesses manage their risk better, because by using technology and partnering with fintech, for instance, if you choose to partner with fintechs, financial institutions in Africa can share their risks with a wider group of players, right? So this helps in discovering the right prices for risk, supporting more trade transactions, right? So all in all, by using technology, you can free up the trapped capital, and that's helping African businesses generate more liquidity, addressing historical challenges, as you may know, and risk on the continent. Now, another important element that you have to look at is to keep up with the evolving regulatory environment. And an important fact here is that you will notice that the majority of companies in Africa have their headquartered outside, right? Especially here in Dubai. I can speak for myself, for example, with Koolute, the headquarters is here in Dubai because the regulatory framework is way too fragile and unstable until today. Also, the tax implications are not very appealing. I'm going to speak about Senegal. For example, in Senegal, you can pay as a company up to 45% worth of taxes, right?
Wow. That's quite a lot.
It is. So still a long way to go. And I'm taking an extreme example here, right? But that speaks to, it's a big point when it comes to attractability for foreign investors, right? Where would you rather be? In Senegal, where you're doomed to face, very high taxes, or in Dubai, where you have a robust regulatory framework and you can have basically a tax-free environment, right? So here, keep up with the evolving regulatory environment. So my advice here would be, again, to conduct thorough due diligence and understand local regulation and build strong local partnerships for navigating this complexity. So develop a robust regulatory compliance department within the institution that you're going to be in business with or invest in, right?
Okay. Now, just to come in there, I think we've run into regulations right now. Africa is very dynamic, much more like very complex and very rigorous to deal with. How do you think investors should be approaching this? I mean, like the EU, there are very strong common fronts among the EU states. Unlike Africa, the Francophone is up to its own, the Anglophone is up to its own, and then the different countries are up dealing with their own regulatory structure, and makes it a bit difficult for intra-African kind of a business. Sometimes it's even easy to do business between Africa and another continent than to do intra-African trade. How do you think investors should be approaching this?
To be honest, I think, like I said, for now, the regulatory framework, whether it's in I'm speaking Senegal and Ivory Coast, because those are the two countries where we are two countries where we're dealing, we're dealing with, sorry. Make sure that you have your headquarter or your holding in a jurisdiction that is stable, because Africa is not there yet. That would be a simple answer to that, right? And then follow the regulatory space in that particular jurisdiction where you wish to carry out your business or invest, right? So that's what I would say to answer the question.
Yes, that makes quite a lot of sense. It's a different perspective, quite close enough, but still in a place of stability and where you can actually predict your fortune and growth. Thank you for that. Very soon, we will be opening the floor to get questions from our listeners and get their perspective on the matters that we are discussing. And if you're just joining us, we are speaking with Cannelle today, and we are talking about investment in the African and the GCC region, risk mitigations and opportunities. We're basically looking at the ecosystem, drawing up some lessons from the regions, similarities, differences, opportunities, and everything in between. So welcome. So far, we've run through quite a number of areas. There's one more I'd like to talk about very briefly before we open the floor for questions. So if you have your question, kindly, you could write them in the comment section, or you could raise your hand and you get the chance to speak. So let's talk about sector spotlights, right? We managed, I think we came across that, but I'd like to talk about it in more details. Speaking to the Francophone, of course, yeah. What do you think are the fastest growing sectors there? What should investors be looking out for in that market? Like industry specific growth metrics.
Yes, so I would say definitely infrastructure, like I mentioned, real estate, right? So what's been happening, for example, in Senegal is that we have just, the whole city of Dakar is being rebuilt around in a complete different area, because there has been a new airport being built and the whole city is relocating in that area, right? So right now there are tremendous investment opportunities for anyone that's looking to acquire commercial properties or residential properties, right? So I would say that for Senegal, it would be real estate, commercial real estate to be specific. Then another area and again, Senegal, because that's the area in which I work, will be oil and gas. Because we've just discovered, it was just about a few years ago that we're able to drill. We have resources, oil resources in Senegal. And I think it's just this year, if I'm not mistaken, just this year that they started to drill it down, right? To exploit that as well. So that's another investment opportunities, right? And I know that with the UAE, especially Saudi, not the UAE, is heavily involved in helping Senegal as well in that space. So I would say infrastructure, real estate, definitely. And a sector I would say also is EdTech. We don't talk about it enough. right? And yes, EdTech. So that's another opportunity, because it's not enough to have like a young population and a growing population. They need to be skilled as well, right? So we're implementing technologies to have more transparencies, right? To have more accessibility as well. But the workforce needs to be ready. So I would say that's definitely a space that we have seen growing, and there are investment opportunity in that space as well.
Okay. Just the opposites, more like the reverse of that question. What's performing like? Where should investors be moving away from at this point?
Moving away, I would say it's for moving away, it's mostly from regions.
Okay.
And that's an investment advice that I apply across the board, right? What I will be interested in investing in and what I will feel comfortable investing in is not what you will be comfortable investing in, right?
Okay.
It really depends on how much do you know, right? If it's not for you, it's not for you. Well, after you've done a thorough due diligence process, if you've assessed that you're not comfortable with the idea of investing in this sector for X or Y reason, and usually it's a lot of, it's too unstable, right? Because what we've seen happening in Niger, in Mali, in Guinea as well, then, okay, then it's not for you. But for example, I am heavily investing in Mali right now because I know enough.
Wow, it takes quite some courage, really.
No, because I know it's all about knowledge. And that's what I'm saying. Why is it that Africa is not where it is today, right? It's because people have been fed a certain narrative. That is my opinion, right? Is the perceived perception of risk. My perceived perception of risk is not the same. Why? Because I have enough knowledge and know-how about how to invest and manage my risks in areas that others may deem extremely risky. Right? So I don't know if that answers your question, but that's how I would...
Yes. It does really, it does largely. Let's talk about ESGs, right? I'd like to understand to the extent that this is actually at play in Africa. I mean, it's common in other continents, but what do you think in terms of impact investment, ESG? What principles really apply here? Are investors really interested in that when they deal with the African market? Does it exist, or is it just some of those things we throw around?
Yes. Well, I would say, first of all, what we have as an advantage now as on the continent as a whole is that we can definitely learn from the more economically developed counterparts and embrace a more carbon neutral approach to development, right? That's the opportunity that's arising for us, right?
Okay.
Because we can learn from that. Now, ESG still needs a lot of regulatory guidelines, and that's not just for Africa, that's for the world as a whole.
Okay.
Right? So none of this is not being enforced. ESG is not being enforced, right? Again, with that being said, it is at the forefront of everyone's agenda, right? Because we're all going to be impacted by it one way or another. And for Africa, I mean, we have 39% of the world's renewable energy potential, right? It's substantial, but we still need to develop the sector. And we're at a point, I feel like I'm looking at Africa and I'm going to compare it to Maslow pyramid of needs, right? How can you think about developing yourself in a way that is sustainable, that doesn't harm future generation when you're still trying to eat, when you're still trying to sustain to your primary needs, right? So ESG is great. It's a trend. I'm very curious to see how it's being implemented and how realistic it is for us at this stage of development. So it's a lot of, yes. So that's how I would answer.
So I think this is something to take away from this conversation. It's really hits me on a different level that some of these conversations at this point may be a bit superficial for some people and for some specific economies, because really they're still at that basic level where it's basically survival and they really do not care much about ESG. But I'd really love to see how it evolves, because I mean, with the 35% you just mentioned right now, a lot is going to unfold in the nearest future, and it's in the best of our interest that we actually pay attention and see how much in advance we can approach this subject and create some pathways for them. Generally, globally, there's still some mix-up that needs to be fixed, and then I just apply that to the African market and get even larger. I think some Africans are just doing some copy paste arrangements with the whole ESG stuff. And if I were to actually say, I'd say they need to start looking at their own peculiarities to see how it actually affects them, adopt, and then be able to translate that to action. Okay, I think I'd let the floor open now so we could have some questions. I see some persons whose hand been up. Let me start with Bethany. Hello, Bethany, can you hear me?
Yes, I can hear you. Well, I was actually clapping, but my hand was not up. But I do have a question in mind for Cannelle. Nagadem, Cannelle?
Magnifique, magnifique.
Cannelle, I just had a question that came in mind. First of all, great argument and great presentation, especially on ESG. I've never looked at it from that lens. But the question that I have in mind is, what, for you anyway, what are the financing options do you favor when engaging in investment in Africa, especially in your sector? I know that debt financing has been fairly favored now just because of the risk reassurance that it can sometimes provide. But for you, what are the financing options that you favor when investing in Africa or investing in your region of focus or your sector of focus?
So this is a tough one to answer because, for example, for Koolute, we grew organically. Right. Fortunately enough, because it's a property portal, and all I did was basically link investors to the most lucrative real estate investment opportunities in Francophone Africa. Right. So it was profitable before even still building the website. Right. So there are ways of having smart business and grow a business organically in Africa. Right. You just play a middleman, link people up, and it works. Because I'm a testament to that. Now, I do raise quite a lot of funds for Francophone-based startups, right? And that's usually private investors. A lot of private investors based here in the UAE, right? Because it makes it easier. There's a lot less pressure when you deal with a private investor, right? Versus an institution, right? Now, with a private investor as well, the whole logistic is easier, right? Because they can easily fly in. Paperwork doesn't. Here's the thing: we're not very developed in Africa. When it comes to, for example, how do you start investing in a project, in a real estate project? All the normal due diligence process, the appraisal, all of that, it doesn't really exist yet, right? You're going to have the property owner or the developer, they're going to say, oh, ask around. They'll tell you how, I'm kind of that. No, really, that's how it works still. So ask doesn't work with institutional investors. So that's why it depends on the sector, but I've been personally working with private investors, right? Or family offices as well. And with the UAE and Africa, the one commonality, I would say, especially Senegal, is predominantly Muslim, right? We have a lot of similitude in terms of values and culture. And that is something that resonates very well with family offices and private investors here in the region, right? So that's something to leverage.
Thank you for answering my question.
Yes, thank you. Thank you for bringing in that perspective, really. Financing options, private financing, public financing. For the Anglophone region, you'd find that especially much recent times, there's been some kind of advancement and adaptability to not private, but VC kind of driven finances. And at the same time, we've seen quite a lot of not exit but collapse. And we've not been able to fathom why such history of collapses, especially for funded businesses. I'm wondering, is it the same for the francophone, or is it a unique thing for the anglophone, like VC funded, well funded, really well funded, having some unusual kind of collapse?
Yes, I wouldn't even call it unusual. I think that this applies across the board. When you look at, for example, FTX, right? When you look at FTX, look at the scandals we had in Africa, the problem is the same. People are human and people are impressionable. And even at the highest standard, the highest level, they neglect due diligence, right? They neglect the due diligence process, which should be ongoing, right? Because perception that he's on top of things as well.
So just a moment, I'd like to hold you on that thought. So due diligence is actually supposed to be continual and not a one-off project.
Yes, of course, to make sure that they're in compliance. I mean, if there's anything we've learned from the last few scandals we had, is that if it hasn't been, it should be. It should be continuous, right? Especially when you're looking at a landscape that is evolving continuously, right? So I would say that it's the same mistake. It's bad compliance, bad bad due diligence process, and neglect.
Yes, what worries me now is that this is a global phenomenon, right? Businesses are collapsing, especially in the startup ecosystem. It happens so fast, as big as it could be. They just crash the ground overnight. But the thing here is that, I mean, if you accumulate all of the figures, the collapses we are talking about, it may not even sum up to some of the experiences and occurrences in the West as well. But then, due to the existing trust issues, just due to the existing circumstances around the African market, it seems to always be escalated. Like the news goes further, and it further complicates the progress of the region. How do you think some of these, I mean, for not just for investors this time, let's look a bit away from investors, but from business administrators and managers, what role should they be playing in making sure that some of these, because I've come to also observe that these things are not easily cleaned up. It happens, the sequence keeps growing, and over a period of time, it becomes a tag that even the genuine businesses would find it twice as hard to actually access funds. What do you think should be the role of these business managers, administrators, in actually managing some of these crises, because it's been actually growing in recent times?
Okay, so two, because this was a very, very long question. So basically, how to manage your risk? What's the role of the company?
Yes, for the business managers, this time not the investors, for the business managers, how should they be managing their risk? When you're talking about investors' money, you have to be twice as careful. What do you think, especially from the African side, where these things get complicated really fast? What should be their approach?
Strong corporate governance. Strong corporate governance applied all throughout, right? Because we cannot, here's the thing, we cannot rely on the government or wait for the government to to impose rules, guidelines for companies, right? And have a strong or robust regulatory framework. But we can start by having companies like that instill a culture where compliance is a must, right? So this is what I would say. It's all about the company culture and how, you know, you have to abide by the guidelines. So it ties that directly to corporate governance.
Interesting. And really, we do not talk about corporate governance enough in Africa. We just sweep over it once in a while. And most of the organization, even the biggest ones, are really not, they've not really got there. They do their business fine, have good products, but really they are not there yet where they begin to talk about and be serious about corporate governance. I think it's a very good point you've added there. I'd like to take the mic back to the audience. I see, Mr. Eric, your hand has been up. Is that a commendation or you have a contribution?
Absolutely. Thank you, Monalisa and Cannelle. Bonsoir. That's my little attempt at the French. My very good friend Bethany has been coaching me a little bit, so expect maybe next next roundtable we're going to go absolute like French. We're going to do from beginning to end. But thank you for honoring just honoring us with your presence here virtually, and it's just absolutely. Just hearing you speak, it just makes my heart, palpitate, the brilliance, the articulation and everything. As a Pan-African, it gladdens my heart, and you're a very a solid representation of Africa in Dubai, and I don't look at it only as Dubai, I know you do interact with others, from different parts of that region as well, but thank you for being here today. And just my question is just quickly back to risk, because it's something that is very dear to my heart, in terms of just focusing on and just bringing attention to the fact that those things need to be addressed. So the question is, how can African leaders and also entrepreneurs better articulate the investment, the risk, mitigation, I would say like strategy. How I feel they're doing a lot of disservice to themselves and also for the leaders to the continent as well. Everybody knows there's a ton of gold and everything that Africa has. It's not, that has it has been. Everybody knows what Africa is blessed with, but it's a problem articulating the opportunities and also addressing the risk. And should that be a focal point of our engagement when it comes to investment, and also offering what we're also doing to mitigate those risk? So hopefully I'm making any kind of sense. How should African leaders and entrepreneurs be a little bit more serious in discussing the risk and also how to mitigate those risks so that they can be more attractive? Thank you.
Yes. So I would rely on our leaders. I would just rely on the entrepreneurs, business owners, and innovators of the continent, right? I just had a conversation, and we had a summit for African founders just a week ago. And don't wait for the government. Don't wait, just start. And do it on your own. So let's start there. But it goes back to the answer I gave earlier, that Africa is not a homogeneous entity, right? So again, like I said, we have to be country specific and industry specific, like we mentioned with Monalisa, right? To have an effective approach to risk mitigation is not going to be a one size fits all. It's never going to be, because the opportunities and risks that are in Niamey are not the same as the opportunities and risks that are in Cape Town, right? So that's the first point that I would say. And I would go back to what I said earlier, where you have to establish a strong due diligence process for market entry, right? Make sure you know the market, make sure you understand what you're investing in, right? Invest in local collaborations, invest heavily in local collaboration. If it means that you have to acquire an existing business, or you have to establish partnership or joint ventures, that's the best way to penetrate the market, right? Also, make sure you equip yourself with the right data. And that takes time. It took me about 4 years for data acquisition process of Koolute investments, right? So there's a substantial amount of work to answer your question. If you want to mitigate the risk of investing in the region, that has to be invested in the diligence for market entry, basically.
So basically, you're saying we have to have a tailored approach, right? Able to have enough data for every situation, and base those assess based on whatever region, and then go from there, right? So it has to be a tailored approach instead of more generalistic.
It can never be generalistic, because the basic things that you need to make an investment decision you don't have. So it's up to you to acquire them. The only way to acquire them is with local partnership, right? Or investing in data marketing companies, for instance. And there are not that many. I tell you a funny story. I told you that last time as well. Data research companies, sorry. When I created Koolute and I was looking for simple market research, very easily attainable if you're looking here in the UAE or in Europe or in the US, there's not one single marketing research company that was willing to basically answer my call. I wanted data as simple as what is the market size of commercial properties? What is the market size of the residential market in Senegal? Because it was going to be too costly and too labor intensive, right? How reliable is the data as well? So that's why I said the due diligence process for market entry is the make or break of your business and the make or break of your investment decision, and how lucrative is how sustainable the investment is going to be as well. Invest heavily in that part of creating the business. That's how you're going to mitigate your risk. And then, of course, stay up to date with, the forever evolving regulatory landscape, right? Stay up to date with that. And like I said, apply an ongoing risk management strategy. Watch out for the currency risks. Watch out for the currency risks, which is a big one. Big ones in Africa, because we have, like I said, it's illiquid and it's volatile. So that's how I would answer your question. And that, I would say, it's basically a recipe that you apply across the board.
Okay, Mr. Eric, I hope that answered your question before we go to round off.
Absolutely, and I see Bethany is also raising his hand, so just to bring your attention to it.
Oh, okay. So one more question, and
just one more question. Yes. You earlier on mentioned about Mali, and which to me is fairly unorthodox. While the whole the whole world, or rather the investment family is sort of showing negative sentiments towards Mali because of political risk, which makes sense. And then there's you who comes who says the contrary.
Hello?
Okay, I think you're freezing out. Are you there? Can you hear me?
In details, and maybe it could be.
Hello.
Yeah, hello. Can you hear me?
Yes, now we can hear you again.
Yeah, apologies. So just briefly, I just wanted to know what are your current motivation in investing in Mali, while this of course contrary sentiments to investing in Mali. What are your motivations?
So first of all, and that's an important point I didn't mention. So I am half Senegalese, half Belgian, right? And up until I was 18, I was born and raised in Africa, right? And I spent 11 years in Niger. My father still lives in Niger, right? So the whole Sahel region, and my mother worked a lot. We used to travel a lot between Niger, Mali, Burkina Faso, the whole Sahel region. That's where I have my knowledge from. That's where I have my comfort zone from, right? Because my dad still works in the region, right? You hear all of you see what's happening in the news. He's there.
Of course, yeah.
That's right, and that's where I extract my information. And I know, for me, and that's that. If you're a seasoned investor, you know this. When people panic, that's the moment to invest. Because when people panic, they pull back. Oh, no. And that's where you have the best discounted investment opportunities. And that applies all across the globe.
And somehow that philosophy seems to be contrary when it comes to investment in Africa. For instance, in the case of Gabon, which went through political turmoil recently, English investors, for instance, decided review their risk mitigation and sort of withdraw from the opportunities. But if it was the same case somewhere else, you'll have these institutional investors that will keep on reminding you, this is the best time to invest. The market has gone down, so buy now. So yeah, you made total sense. So thank you so much for this information.
But again, what I wanted to add to that, foreign investors would not touch Mali unless they knew and they had already been there, right? I'm a private investor, and I consider myself a local, basically, right? So it's very, very different.
Yeah. Okay. Yeah, thanks for clarifying that.
Yes, I was also very curious of knowing why you choose to enter when others are exiting. It's I don't know how to put it, but I think the background information helps put some of those cares to rest, because yeah, this is a familiar terrain. You understand exactly what you're doing, your risk mitigation and all. It would be completely different from a foreigner who he's just stepping into the market for the first time. It would be extremely risky at the same time. Thank you so much, Cannelle. We've covered quite some grounds in the past 1 hour, looking through the investments in the GCC and the African region, risk mitigation and opportunities. We've got the opportunity to look at industries, key industries, emerging industries, thriving industries, opportunities, regulatory framework. A whole lot of things have come into this conversation. We really thank everyone who've made it a point to be with us today. For those watching here and for those watching us on YouTube, thank you so much for being a part of our discussion today. Of course, we host this event, this virtual roundtable, more often than you would believe. We have another one coming up on the 20th, today 17th. We will be speaking with other distinguished speakers who will be joining us from IntMax. Of course, the founder and co-founder of IntMax. And of course, you would be meeting us here again on Zoom, the same pattern, of course, with different faces and different topics. Thank you so much, Cannelle. We really appreciate your presence and your insight into the subject matter. We really do appreciate, and we hope